Hey traders, so welcome to the double shot. It's a little past 6 o'clock in Chicago. We are on the 22nd of August. Let's jump onto the charts once again and see where things stand. Today I just finished writing the daily drip, so you should have that in your mailbox already. Go ahead and check out that report. I kind of went in detail a little bit about the S&P and the rest of the market as usual, with some of the key points that I see in the market. But basically, we're still we're still underneath some key resistance levels in here. We're holding some support. We're in a kind of a middle of the road, not really going anywhere. I guess the markets are a little bit in limbo waiting for Jackson Hole on Friday. We did close on a negative side today, not by a lot. 30 basis points is not much. The Nasdaq actually did a little bit better. The Dow Jones, not as good, but there are good resistance level here near 43.25, and then if we lose those, we're probably going to go ahead and hit this 4200 if Jay Powell says anything crazy. But the main key continue to remain the yields, and I'll touch on those here in a second. So I'm just kind of waiting on the S&P 500. I need to see a bit more evidence. Maybe we can get back about 4450 and things start to look a little bit better. For right now, it's just they're just a little jittery in here. So take a look at the Nasdaq, right? It was down about 20 basis points, so it did a little bit better actually. The XLK and technology, just on a relative basis, are outperforming here for the past several days. We got rejected from the prior fourth wave. We're still below the key moving average. You can see how they're selling against the 20-day, a declining 20-day EMA in here. So that's a normal course of action, kind of what happens once you break below it. So we got to retake it, get back above that blue dotted line and see if we can stage further advances. Dow Jones, it's holding pretty well at this support. It had two nice rejection candles from, on the prior 2 days, but today we kind of came back and revisited a close near the lows. It's not a very good picture, but you're sitting at a massive support, so I don't know if this is going to give way. There could be a little spike, maybe into 34,000, and then a bounce back. We got good support also at about 33,760, but anything really below those levels, between these levels right here, it starts to look ugly, because remember we looked at this as a 1-2, and now we're getting much deeper. So this makes this whole rally here a three-wave move, and that's not that pretty. You can make a big massive flat, but it's it just kind of gets a little bit harder to count it here. So I'm gonna just stay patient and just wait for a resolution on the Dow Jones, but it's not really what I want to see from the markets here on the Dow Jones, right? We did talk about 34,500. We're still in the zone, but the markets need to really get back and get out of here without lurking at these levels too long. I'm just not going to go through a lot of these because they're pretty much the same. Let me see semiconductors. Again, just a rejection from the 20-day after pretty 3-day rally, right? We gapped up into 3600 in here, and then we got rejected just at a 20-day EMA. Nvidia has earnings tomorrow afternoon, so that's going to be a big deal. Let's see what they're going to do there. I'm going to touch on Bitcoin on the chart, but there are a couple of ways to count this. I'm going to go on a motive wave and just kind of show you that. So it looks like we're sitting at about this 25K on the daily time frames. Ideally, let's see if we can reconquer these moving averages. Otherwise, we're very vulnerable here. So, I do like the fact that we're on a strong support. There's a good risk reward below 25K. But price evidence is still kind of lacking that there is, any serious buying coming in just yet on Bitcoin. So just further cautious on there. Now let's talk a little bit above. Let's touch on the dollar too, because this one, this 22nd, it's they got the prices from today. It's just kind of relentless. Look, you've got Well, actually, you got 1, 2, 3, 4, 5, 6, almost a week since it actually started to rally a bit stronger. There's a week of price action that holds at about 103.50. We talked about these levels before, right? That's a massive resistance. They're not able to kind of get through it. Today we closed on the upside on the dollar index. Maybe there's a signal that they want to send it up into 104. Maybe there's one more drop into the equities, and then once that happens, maybe we can start to reverse. But the dollar in here and the yields are the two most important things that we got to look at the moment, and we want those to relax to be able to allow the market to get back to the upside on here. I know it's the month of August. Month of September is also not a very good month for equities, so we're in a period where a lot of funky things can happen here as we're beginning September. So that's why I'm keeping an eye on the dollar and the yields. Surprisingly, both gold and silver, and I mentioned that into the report, both gold and silver are rallying here pretty nicely. And I don't know why. I mean, look at the volume here in silver. And actually, yesterday I think I talked about silver and about the Aussie dollar into the report, and I was kind of starting to turn pretty bullish on these. From good levels of support. It looks like nice corrections. Good reactions to the upside. We're hitting the moving averages. But they're not really responding to stronger yields and a stronger dollar. So to me, that's a big question. Take a look at gold as well. Look at the volume in here. It might look like a little bearish flag. And also silver is outperforming gold, by a good margin already, right? Relative performance versus gold, it's pushing higher. So, but look at gold. They're straight off 1910, 1920, whatever this level is, good resistance on the way up, and then, now good support. So maybe they're hinting that the dollar might start to turn back lower. So that's kind of what I'm watching. Now, once again, let's take a look at the yields. And they pushed higher once again. So they made a new high towards 4.36, right? So 4.36 was the high on the 10-year yield. Then we pulled back and we closed lower. That's a good sign, but there's really nothing there, right? It's still just a pretty decent uptrend. We're right near these highs. So, what this did actually told me to go back and look at the counts. In terms of trend, right, you seem that you have an established upwards trend that kind of started the moment we broke these, 380, 385 level. We came back, retested the moving average, and then started to trend. Now, this happened, you can see in here kind of mid-July, right, when we started to kind of rally. And that's exactly when kind of the stock market started to slow down a little bit and push lower, right? So these rising yields from 372 to 436, 437 in here, created a little bit of a scare into the market, especially on the technology side. So now let's take a look, because I have the counts in here and I wanted to show you. I mean, this is a note that I've made, I don't know, I think it was back late last year or the beginning of this year when we were rallying up higher here, making this larger wave. And I think I talked about it back then about how, a drop in yields can help the stock market, and we were watching the development of this fifth wave, because the count was a 1 2 1 2 1 2 3 4 5 4 3, down in 4, up in 5, right? This is the wave 5 of 3, should be near completion. The corrective wave 4 is expected next. This is what this happened. I did not modify this, so I left this fourth wave as it was when I was working this level, so we were pretty close to it. I was just kind of looking at the right look in terms of size. Now, this one was pretty steep. This one was more sideways. A 38.2 standard fourth wave correction can take yields back to 3%. Well, how low did we get? We got to 325. We didn't even correct, let's say, 23%, right, of this entire rally. So now it looks like you might have a completed fourth wave already. This could be B wave of a flat. Of a fourth wave. So you can have an ABC alpha flat. So you can have these three waves and then maybe a B wave, and then you can do a sharp decline, mimic this kind of second wave, and then go back up higher in 5. Or you can already kind of complete wave 5. Now, since wave 1 was so long, I don't think that this wave 5 will be that aggressive. Plus, there's a couple of other things that I'm kind of looking at, and I don't know if you guys are, familiar with this, but I started to incorporate a bit more work lately into the cycle. And I mean, I've been watching cycles for the past, I don't know, 10 months or so, 8 months, and just kind of trying to learn a bit more about them and just kind of see what's going on. But for example, if you look at the I don't remember how many days is in this cycle. It's probably, I would have to go back and look, but it's probably 120-day cycle or something like that. But it does suggest, and this is a 10-year yield, it does suggest that you are in a period of lower yields to come back into 2025. So we're in 2023, we just kind of barely made a new high in here, and it's possible that once we complete this fifth wave, we get lower into much larger correction into 2025. Now, don't mind these levels because they don't mean anything, 1.5. This is just the direction of the cycle, but it doesn't necessarily mean that these levels will get hit. It could be something like this that could happen, right? And you can come back in yields maybe near 3%, maybe near 3.5, 2.5, 2.5, and then maybe go back up higher, after 2025. So that's the idea on the yields. I mean, listen, we've rallied since, we had we are on a 3-year rally already, right? Since summer of the spring of 2020, right, when we had COVID, and then here we are in the spring of 2023, summer of 2023, getting into the fall. So that's a full 3-year rally into the yields. I think that we're probably going to start to kind of come back down. Then take a look at some of the DeMark indicators. These are also things that I kind of look at it every once in a while, and trying to understand it a little bit better. But we do have some 9 signals in here from I think both sequential and combo. And then we had a little bit of a 13 in here as well. These are the weekly time frames. So, every time you get a 9, that means that, at least you have a completed sequence and you can start to, have a little bit of a cool pullback before you actually go up on a 13 again. But that's 10, 11, so 12, 13, maybe a couple of weeks more. Take a look at the daily time frames as well, right? Every time you kind of had a 13, look at this 9, look at this 13, look at this 13. We are getting near a 9. There could be a bit more to go, let's say, on the daily in here, but we're wanting into kind of borrow time onto the yields. So if you look at that, right, and kind of what's going on with the cycle, what's going on with the counts as well, this might mean that you could be, if you take a look and think about the positioning on the bonds here, which is extreme on the short side. Everybody's kind of getting excited as we're just about to make a fifth wave, and I think that's important. So, lower yields, do not necessarily mean, higher stocks, although, the technology sector should benefit of that. And, a lot of these maybe higher beta stocks, could that mean that the Fed might start cutting? They would have to have a reason to do so. The economy is doing well. I don't want to get into all of that, but depending on kind of at what rate it happens. If it's a slow decline in yields and just a simple basic correction, we could find ourselves to new all-time highs in the equity market. So that's kind of what I'm watching. Also, looking at Bitcoin. Actually, let me touch on Bitcoin here really quickly because I promised you I'll do that. So there's a couple of ways to look at this. First of all, let's just kind of think about this. 1, 2, 3, 4, 5. I think it's an appropriate count. I got this one that kind of terminated in here, and then we have the other one that looks that the wave 1 terminated in here, counting this a little differently, 1, 2, 3, 4, and 5, and then this will allow for this to become much bigger. Let's say that's a maybe an ABC for a W, you get an X and a Y, so this could still linger for another several months in here before we actually finish off this decline to move higher, maybe close this gap at about 20,000 before we go. That's one way to kind of look at it. And then this one kind of got dismissed, but here is the one that we're watching right now. 1, 2, 3, 4, and 5 for the wave 1 flat. in a wave 2, either via WXY or just an ABC. This is a it's a little bit messy when you're kind of counting this, but it does look corrective. So, if it's an ABC, then you can make this an impulse, that's a B, then you have a 1, 2, 3, 4, and 5 for a C, and you could be done and start to rally. If that's an A, that's a B, and that's a C, then, you have basically a 1, 2, 3, you're going to have to do a 4 and a 5, and break below this and then rally. So we'll find out, but listen, instead of guessing, let's see what the market says. Maybe we're going to get some kind of a reaction and break back above 28K, above 29K, and then, then we'll know that the next leg to the upside has already begun. Like I said into the report, if anybody wants to, get a small risk reward, 24,750, it's a good defense level. It could be that they're trying to kind of test that and maybe overtake it quickly to the downside before reversing. So just be aware of that. Look at this level right there. You can see it, right? Several touches, 1, 2, 3, 4, 5, 7. So it's a big level. It's an important level, right? If you want to get the stops, maybe a few percentages below this level, that could get you a good risk reward to see if you can move to the upside. Otherwise, one could wait until, this level, 30,222, gets taken out, and then see if we can move back towards 40K and 50K into the next leg higher, lower yields, maybe higher stocks, things of that nature. But for now, here we are sitting at current levels. So that's it for today, guys. A little bit of a longer video, but hopefully this was helpful. Let me know what you think, and I'll talk to you later. Bye-bye.